Hello, and welcome to our Broker Concierge 315 series. My name is Joanne Vernon, and I'm the Regional Advisor for the West Region. What is the 315 series? Well, we know it's a very busy time of the year, but information and learning still continues. So we take 3 slides, present one topic in about 5 minutes or less. And today I'm going to talk about non-discrimination testing, or NDT. So what is NDT testing? Well, specifically, the IRS created a series of tests that are designed to make sure that certain highly compensated participants don't use or select more non-taxable benefits or pre-tax benefits than the rank and file employees, and that contributions and benefits are available to all employees on a non-discriminatory basis. So what plans are subject to NDT testing? Well, they're your cafeteria plans, including a POP, health FSA accounts, dependent care, group term life, self-insured plans, which include your HRAs, and adoption assistance. And dependent on the plan that is being tested, there are different themes that the IRS is requesting be tested. For example, eligibility, benefits, contribution and benefits, key employee concentration, more than 15% owners concentration, and a 55% average benefits. And some of the plans require more than one test to be performed. For example, a cafeteria plan is required to be tested for eligibility. Are the employees that are being offered the pre-tax advantage fair and equal and not leaning towards those highly compensated employees? They also require a contribution and benefit testing. Are those highly compensated contributing more to the plan and therefore they are realizing a better benefit? Or is the plan design leaning towards those highly compensated individuals? And then the final test for a cafeteria plan is the key employee concentration test. So you may be asking yourself now, well, what is a highly compensated employee? Well, a brief description, or simple one, right, is an officer of the company, a more than 5% shareholder, an employee who earns $120,000 or more, and that number is for 2016 and 2017. But one thing that you may not realize also is that it includes a spouse or a dependent of someone that I just mentioned. So a spouse of an officer is considered a highly compensated employee. And believe it or not, if you're doing the testing for HRAs, that highly compensated employee definition is even more strict. So when must plans pass? When do they have to be in compliance? Well, they must pass their non-discrimination testing by the end of the plan year. So if your plan runs January 1st to 12/31, you would have to be in compliance by December 31st. So what happens if you don't pass? Well, the tax treatment for those highly compensated employees is lost, which means now they have income that is imputed on their W-2s for tax reporting purposes. And worse yet, if the IRS could find that a plan has been out of compliance for many years, that'll result in amended W-2s for each of those highly compensated employees, along with amended tax filings for those highly compensated employees. So what do we recommend as a best practice? Well, have your test performed in the middle of the year. This gives you plenty of time, if you fail the test or even a portion of it, to do some revamping, to do some rework on it, so that by the time it's ready for that final test at the end of your plan year, the last day, you'll be able to pass. Is it too late to perform the test this year? No. I mean, I'm telling you that the best practice, right, is to do it in the middle of the year. But you still have time if your plan year ends on 12/31. Run a test. Get in compliance. Because even if your plan was out of compliance for the whole year, as long as it passes on that last day of the plan year, it's considered in compliance for the full year. So I hope all this information was helpful. Please be sure to check out our other 315 recordings at our PrimePay Broker Concierge YouTube channel. Thanks, and I look forward to speaking with you soon. Bye.